All right, good morning. Welcome back. Welcome back to Back in the Black. I'm Merritt Black. That's a tongue twister. Coming to you live from the Place Your Trades Network. Today we're going to be talking markets. We're going to talk psychology. We're going to start the week right like we do every week here. And of course, we're going to make some picks. Today's podcast is brought to you by Tradeovate. They've got a built-in custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. Use the link in the chat. Start using the web app for free. You can follow along, make your own picks. Once you sign up, as you guys know, your first trade is free. Make sure you like and subscribe to the channel. I think what we're doing here is really cool. Just an amazing cast of characters trying to bring you these really cool shows, day in and day out. So we appreciate you showing us some love on that. Remember, as I tweeted a second ago, I will be taking at least one question live today here. So you can use the chat here on the stream, and we'll pick out a good one and help somebody out here with a good answer if I can. All right, so we are 1-1 with our picks so far. I did want to cover that. But we're definitely back in the black. We are definitely back in the black. I forget. We're going to get more and more. I believe the plan is we're going to get more and more official about our picks, about kind of our ongoing P&L, if you will. I forget the price of the first week. It was an S&P call. Didn't go our way. It tried to right off the morning. I'm a short-term trader. It just started running at it right in the morning, and then it was not a good day, and we didn't end up getting a yes pick somewhere in the S&P. Last week, we absolutely, much to Tom Canfield's chagrin, we nailed crude oil. We got way back in the black. I forget what price I bought some for on the show, and then as you know, it didn't work out early. I added to it. If I recall, I got my average price down to like $8 or something. So I ended up making a good chunk of change on that one as it worked. Now, just want to cover that. You should see us just talking amongst each other. Me, Crudele, Canfield, Tracy, Anne Marie, everybody, right? We got this banter. We're fading each other. It's a lot of fun. Um, it's replaced another app that I used for, let's say, more sports related content. We're just having a lot of fun with it. Anyways, let's talk some psychology. Please come, step into my office. Oh, here we are. Beautiful environment. This one it's kind of process related. Okay. There's definitely process to this, but it truly affects psychology. If you get this right, a mentality, if you will, a decision, if you will, and kind of pick a direction, then you will be left with much less really difficult psychology to deal with. And I'm all about that. I think that a lot of process things fix psychology things, okay, or cause them not to show up in the first place. Here's the deal. Trade management will never, ever, ever be perfect. I see so many traders day in and day out searching for perfect trade management. And what do they use as the benchmark of whether or not trade management was good or not? Well, the answer is hindsight. They use hindsight to tell them, once it's all said and done, whether or not that exit was a good one or a bad one. And what does that cause? Amateurs or less than ideal, process-driven traders to do and to adjust. Well, it's exactly that. They constantly adjust. They constantly flip-flop, whether they're going to hold for a big move, or whether they're just going to take those profits on the table based on what happened last trade or the past two trades. Well, I'm not going to let the market hurt me again, right? I'm not going to experience that again. I'm not going to let a big open winner come back and turn into a loser. I'm not going to not take those profits, right? or not let something run and exit out of it when I should have let it run, right? Woulda, coulda, shoulda. It's all crap. I'm telling you. So we don't want to be like this, right? What do we want to be like? Here's a question we can start with. It sounds a little odd, but ask yourself, what makes you more upset? You personally, figure it out. What makes you more upset? One of two things. Is it giving back open P&L, or is it missing a move that runs without you after you exit? Which of those two things can you tolerate happening less? And then I encourage you, if you have a real gut answer to that, focus on making the right choice for you, right? Everything about trading, I think there's certain fundamentals that you have to do well, but then beyond that, right? Million ways to skin a cat, or whatever the phrase is. This is one of those choices. Trade management is one of the biggest choices that impact your trading for you, your style. What do you want to do well? So if you can't handle giving back open P&L, you need to design a trade management style and process that locks in and secures more P&L along the way, quicker, if you will. If you cannot handle missing those moves when you get out, you need to risk giving back open P&L, right? The lesser of the two evils, so that you're there and in for big moves, right? And guess what? Neither one of those choices are better than the other. Just don't go back to that old way of, oh, I knew I should have held here, right? Well, you didn't because you exited, right? If you knew you should have held, and that was with 100% certainty and clarity the thing to do, you wouldn't have done anything else, right? No, the discomfort you were experiencing around the fear of potentially losing that open P&L was more important to you than whatever analysis might have said it might go higher, but you were also afraid it might go lower, which is the thing to be, because we don't know if it's going to go higher or lower. So again, I want you to see how much I'm talking kind of process here and system design, if you will, but this is a psychology talk, right? This is avoiding being a worse trader because of our psychology. This is giving us concrete steps to implement so that we avoid being and experiencing the type of frustration that most amateur or beginner traders experience. All right. Thanks for coming in today. I'll bill you for that. Let's talk a little bit about some markets, what's going on. We'll take a look here. So let's start with the S&P. The S&P is coming up on a nice little inflection. Where is it? Like around 75. Yeah. So I kind of like leaning long S&P today. But it's not it is not like I'm saying A plus, gotta do it. This is the trade, but we're at a really interesting inflection here. Let's call it somewhere from 65 to 75, right? I'm not familiar with this platform here, but I think it'll let me draw. Yep. 65 to 75. Okay. So this little zone that we're coming up and touching right here, right now from below, well, it keeps drawing, huh? There we go. I think is really perhaps the best line in the sand today. I think I do like the long side of this. I think we're definitely not in the clear until we start clearing that upper end of this at 75. But, if you wanted to be more aggressive, you could be bullish early on. Be careful, though, as we see sellers showing up here at this high, by the way, right now. Be careful if we see 65, 63 area, find sellers. And I'm telling you right now, we've found a little bit of sellers. So I wouldn't be just pushing it long right here after we've kind of made this move up from the immediately from the 40s, but from the overnight lows from the teens. So, anyways, I do think this is a good line in the sand for today to kick off the week in the S&P. What about some other markets? What about the old crude oil? So crude's been on a tear, right? We hit those lows, big picture, down in 76. We've run all the way up to 92, 93. So that's a big move. We've run up to kind of our VWAP for the year. Those of you who know what that is. And we've got a nice little upward momentum going. Obviously, markets don't run in a straight line forever. Today, we are opening in the area where we kind of balanced a bit. Yes, Friday coming into the weekend. So right now, I see crude as kind of rotational. Short term, you could look at something above 92.80s. If we break out, you could look at something below 91.60s if we break down to the downside. But right now, I wouldn't really be interested in touching it. As long as it's inside this box here, not too interested in what's going on with crude. Bigger picture, as I mentioned, we have made a big run, right? We've made a nice big run. And a lot of times that means that there's a little more risk reward for something of a pullback. But we're just not hitting any really, really key levels into 92, 93. So I don't have high conviction that a pullback is necessary. But my favorite trade in crude oil today would be if we break down below this 91.60s and can hold it, I would look for a move all the way back to essentially 90, right? So this area right down here, kind of where we left this zone before. Specifically 89.80 would be the level, but call it 90. So just wanted to cover a couple markets, take a look at a chart, kind of what we think coming into the open today, now that we've got an idea of some work that perhaps we need to do with trade management, making some decisions about who we are, what we might do best, what might make us happiest, what might allow us to have the most fun trading. Let's have some fun. You know what else let's do? Let's make some picks. All right. So, again, as I mentioned, I like the crude oil pullback. So let's see. Crude oil. Let's take a look at our strike list. We're currently trading at 92, so that's kind of at the money. And I like the no side of things. So no's offering at 975. That's a pretty good deal. But again, we don't have the certainty on this trade yet until we start breaking down those 91.60s, right? So I wouldn't want to just put this trade on and cross my fingers and hope that it breaks down and gives us that opportunity. This is one that I want to look for. Okay, it's breaking down, it's confirming. Let's take a look at a pick. Now so I'm not going to make a crude oil pick here. We'll make another pick today. But what I will do is just give some of you, for perhaps as beginners who have never, let's say, traded options or things or done sports betting or things where there's pricing based on probabilities like this. So I want to give you two ways to think about potentially, if you wanted to, playing the crude oil downside today, right? So I mentioned the no, right, rather than the yes. The no is saying, no, we will not close above whatever price, right? So it's saying, I think we're going to be below this price. So we're going to focus on the no sides just to keep it simple, okay? So we're currently trading at 92. We think we could head all the way down to 90. So let's focus on the 92. No. right? And let's focus on the 90 no. So here's 92, just my hypothetical chart here, right? Here's 90. And what are we currently doing? We're currently trading something overnight about like this. Okay. And here we are right now, 92.18. Which is the more difficult bet or trade, right, to play out in our favor? To say, yes, I'm going to rephrase it. Well, no, I'm going to use the no's. No, we will not close above 92, right? That's option A. No, above here. Yes, below here. And we're currently trading right here. Or is the easier win percent, higher win percent trade going to say, no, right? We don't close. We will not close above 90. We will close below 90. Which of those is more likely to happen? Right now, we're trading 92.18. Let's see it in the chat. So, of course, 92, because it's easy. All we have to do is trade down a few cents, and by the time we close, and we're below there, we are not above 92. So that trade is a winner. However, it's much more difficult for this market to trade all the way down a couple bucks and close below 90, not above 90. So therefore, let's take a look at the pricing. The pricing for the 92 bet is we risk, I'm just going to round these. We risk 9 to make 11, right? Because it's kind of a 50-50 toss-up because we're kind of trading right at it. However, if you want to say, I think we're going to go all the way and close below 90, you only have to risk, I'm just going to, again, round 2. It's 250. I'm just going to say 2. You risk $2 per contract, right? You can trade 100 contracts, by the way. I saw somebody on Twitter the other day saying, why would I only risk or gain $20? Well, why would you only risk, $12.50 in the S&P? Well, you can trade more than one contract. So anyways, we'll risk 2 here to potentially make 18, right? That's a big, big, big risk reward. And it's only $2 away from where we're trading right now. Like what's the average, kind of ranges we're seeing in crude oil? I'm not sure exactly what those numbers are, but if I had to guess, I would say the average for this past 6-8 months is probably around $4. So we don't have to move half of what's kind of normal in a 24-hour period to get down there. So what a lot of us are finding is that we like these kind of out of the money picks with big risk reward because right now in the current volatility that we're experiencing, they're reachable, right? They're doable. So it's kind of fun going for some of these home run trades. We're talking 9-1 there on your money on the 90 pick. So anyways, I just wanted to explain how to think about the pricing and how that makes sense for some of you based on where we're currently trading, where we might have to trade for a yes or no to go to be profitable. So anyways, hope that was helpful for some people. All right. How about the S&P? How about it? Let's take a look at the strike list. Okay, so since I spoke last, the S&P is hanging in here above this kind of 63, 65 level. Oh boy, Crudele's taking the bets, which I was very clear that was not a trade yet. But there we have Crudele. He's probably in the middle of a hair routine, just kind of making picks halfway listening. So that's on you, buddy. All right, S&P, it's holding in here despite the kind of the selling. Looks like we got a little bit of passive buying here, holding us above these. So I like the bounce. I'm leaning towards the bounce. It's not 100% confirmed yet, but let's make the pick. So I think that if this bounce is going to work, right? We talked about that kind of 65 to 75 area. If that's going to work, I think we could easily clear 3,700, right? So 3,700 is at 550. Let's risk 140. So I bought 10 of those. So I like that pick. Feeling good. 3,700 S&P closing above it. I will manage the position potentially if we start to hold back below those 3660s, that key line in the sand. So it's not a set it and forget it for me today. But I like the pick. All right. So, guys, I really hope that you're enjoying these talks. I know we're having fun. Subscribe to the YouTube channel. You can follow me at Merritt Black. That's 2 R's, 2 T's. And you can follow Place Your Trades. We got some people doing some, I don't know if you guys saw, I was freaking Jack Sparrow today with my face on it. I don't know how they do that, but it's pretty good stuff. We're on Twitter there. If you want to have a chance to win our weekly giveaways, prizes, go to placeyourtrades.com and sign up. We'll see you guys next Monday. Hopefully you had some fun. Cheers.